Traders Corner is brought to you by IG.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it seems that property shares are not the portfolio's friend. And we'll start off the show with Redefine Properties, which was a trade that you entered last week, and it didn't go the way, I guess, that you had hoped.
No, it hasn't gone the way we hoped, unfortunately. And this is the second time this year that we've traded a listed property stock. We've traded Resilient before, and we lost money on that one as well. So, yeah, it didn't really work, unfortunately. Let's quickly have a look at what happened. The chart of Redefine is up on the screen at the moment. And what I'd identified was that the stock seemed to be narrowing into this large triangular type of pattern. And this lower uptrend had held quite nicely as support. There was also a little bit of a sideways channel that had been evident since September over there, basically between about R11.40 and R11.90 per share. And my thinking was that, looking back historically, whenever in November, Redefine declares a dividend and then it goes ex-dividend late towards the end of November. And historically, we've often noticed that the share price tends to rally into the end of November on the back of that. So I thought, well, we've got a decent enough technical setup here, as well as this historical pattern of strength into the November dividend. It looks like a viable trade, so let's go for it. And we did. We went long of 15,000 CFDs at R11.65. We put our stop loss below R11.40. And I said at the time I would use a bit of flexibility around that stop loss. And I was looking for a move back up to the top of that channel at around about R11.90 as a minimum target. Now, unfortunately, what happened is the share price has actually broken down below the bottom of that sideways band, and it's also broken below the bottom of that uptrend that I'd identified. And that meant that I had to stop the trade out. I got out at R11.34, so obviously there's a little bit of slippage there as well from the R11.40 stop loss that we wanted ideally to use. And that meant that we lost 5,550 Rand after transaction costs. So it's unfortunate. I think what's mainly caused this weakness in the listed property space now over the last couple of days particularly is that US employment figures that we saw last week, which came out quite good, and now it seems very much almost in the bag that we're going to get a US rate increase at the December FOMC meeting. The Fed funds futures are pricing in a 72% likelihood of the first US interest rate hike in, I think it's nearly 10 years. So as a result, you find that there's a little bit of a lack of appetite for emerging market yield assets in a situation like that if you can start attracting yield or getting some sort of yield in the US. So as a result, we saw the property stocks coming under a bit of pressure, and Redefine was no exception there.
And I think there's also a little bit of fear that we are going to have to start hiking rates here soon, even though the economy is in such a weak situation. Okay, so unfortunately, not great, but you have to pick yourself up and move on, which you have. And so you're actually entering a new trade this week. So, Garth, tell us why you're looking at Steinhoff, which has been really, really strong of late.
Yeah, that's one of the reasons I like it so much, is that it is really, really strong. And in this market, which has been a little bit iffy and tricky to trade over the last while, you do kind of want to stick to your strongest stuff. And what I mean by the strongest stuff is the shares that have really held up well, despite any market weakness that we might have seen. And Steinhoff certainly fits the bill as one of those shares. So if you look at this chart, the dominant feature here is the fact that it broke above this lateral resistance at 80 Rand per share in September. And that is a very bullish breakout, and it basically puts the share price into a sort of a new trading band. Now, what it looks like at the moment is that it seems to be trading into what looks like an ascending triangle pattern over here. And these are typically continuation patterns within a trend. And usually what you'll find is that the pattern will break to the flat side. In other words, this time around, we've got the flat side up here at about 86.50 Rand, and we would expect a rally eventually back up to that level and probably to break through that level. What got my interest yesterday particularly was that Steinhoff was ex-dividend of R1.65. And my strategy all along had been to try and buy it on any weakness towards the bottom of that ascending triangle following the ex-dividend. Because typically what happens when a stock pays a dividend is that usually, all things being equal, it will usually fall by the amount of the dividend. In the case of Steinhoff yesterday, it didn't. It initially fell by about half the dividend, and then it managed to claw its way back throughout the rest of the afternoon. So that, again, is testament to the fact that this is a very, very strong stock. It's held up very well despite any market weakness that we might have seen. So in that instance, it appeals to me to buy a stock that's so strong like this. If the market were to move higher, Steinhoff likely would be one that'll go higher with it, being the big if, obviously. And also keep in mind that Steinhoff is due to list in Frankfurt in November, and that probably in December rather, and that probably should also serve as somewhat of an underpin for the share price.
But Garth, you've got the oscillators on top there, and it does look as if Steinhoff is quite overbought, or close to being fairly overbought.
That stochastic oscillator, I would say where it is right now is in somewhat neutral territory. Okay. What you need to keep in mind with the stochastic oscillator is that it's a momentum indicator, and it can stay overbought in the case of a strong trend. It can actually stay overbought for quite a long time. And you can see it over here, basically from the end of August all the way until early October, really. It stayed in the upper half of the band of the stochastic where it oscillates typically, meaning that it stayed relatively overbought. So where it is now, I'm not that uncomfortable with it. For me, the price action is what's more relevant here. And I think the price action, given this ascending triangle structure, looks good. Also, just in terms of an ascending triangle, usually you want to see 5 waves, ideally, and typically the 5th wave is the one that breaks out. So what I see here is we've got 1, 2, 3. We're in the process of the 4th wave of that triangle structure forming now. If we start to see a reversal up and a move higher from here, then that would probably be the 5th wave, and that could quite feasibly be the one that breaks to the top side. So all in all, fundamentally and technically, I quite like the look of Steinhoff here. So we've decided to go long of it this week.
Okay, so well, just show us there then what your projections as far as what you're hoping to achieve from the trade.
If you take the height of your ascending triangle pattern at its broadest point, you then project that distance out from where a breakout would potentially occur. That gives us a target of around about 92 Rand here. So that would be sort of a best case scenario for us. So what I've decided is to go in. I've bought at 84 Rand yesterday, actually, and my stop loss is 82 Rand 50. The target's initially 86 Rand 50, which is the top end of that ascending triangle pattern. And if that level can be broken, then I'll look for 90 as a feasible target with potential for a little bit more. But I'm not going to be too greedy in terms of the upside target.
I mean, that's quite a tight stop loss, but maybe talk us through the mechanics of the trade first, and then we can have a look at that stop loss, because it's not too far off your entry level.
It is quite tight. The reason and the thinking being that if it starts to break below the bottom of this ascending triangle pattern, then it invalidates that whole structure. Then it's probably going to go back to 80 Rand, and now I'd rather be a buyer at 80 in that case and have another look at that level. So if we go through the mechanics, I've gone long at 84 Rand per share. My stop loss is 82 Rand 50. That means that my risk per share is 1 Rand 50. I'm risking 1% of our portfolio here, and we've got 355,000 Rand available to us. So risking 1% means that I'm willing to lose 1% of that capital if this trade should go wrong and get stopped out. So I take the capital risk of 3,550 Rand. I divide that by 1 Rand 50 per share, and that leaves me with a result of 2,366 shares. So I've rounded that down to 2,300 CFDs, and that's what I've bought for our portfolio this week.
Garth, any particular reason? Oh, I mean, we talked about the targets, but the risking 1% of the account, is that? It's a little bit less than maybe it's half the maximum. So
yeah, I think it's kind of got to do with the fact that the market overall is a little bit iffy at the moment. And you'll see I'm going to show a chart of the top 40 now and show what I'm seeing there. And I just think in light of that, I'm going to rather just err a little bit on the side of caution here in terms of taking too much risk on this trade.
Okay, but as you've said there on your screen, the target 86.50 and 90.
Yeah, target's 86.50, 90, and then that would mean that my risk to reward ratio is either 1 to 1.66 or 1 to 4 if we get the higher target. So obviously somewhere in that sort of area is where we would be looking for. And my exposure here is 193,000 Rand. So that's the total value of Steinhoff shares that we've effectively got an exposure to.
Okay. So Steinhoff has held up in a tricksy market. So you've got a chart of the top 40 there, and
it's just to show where we're at the moment with the top 40 index being obviously the overall, the biggest broad index in our market. Recently, we had this market peak at 49,100, which is now you can almost say there's a triple top there. And the market seems to be turning down off of that level now. And just keep in mind, we do have an option structure in place. We've spoken about this at length on the show many times before. But keep in mind that below 46,000 is where we're protected. Now, if I look at the structure as it is, I won't be too surprised to see us move back down into the circled area over here, which is where the 50-day moving average and the 200-day moving average converge. And that comes in at around about 46,300 or there and thereabouts. If we were to see the market pulling back into that area, then my sense is it will be quite oversold by that point. Also, what's nice about that is it comes back to the point where we've got this option structure which gives us protection down below into December. So I could then do some buying, again, knowing that I've got the option structure in the background protecting us. So if we see a pullback into that sort of area, then I certainly will be looking to buy. And I just want to take this one step further, and that boxed area that I've got over there with the dotted line, I want to zoom in on that now and look at the top 40 future, focusing specifically on that area of the market now. Now, this is a 1-hour chart of the top 40 future. And what's quite interesting, you can see the big tops there. And now in the future, the top comes in at 49,500. That's higher than what it is on the spot index, because futures have a time value of money out to December in this case. But what's notable here is this lateral support at 47,500. And if that starts to break to the downside, then it does potentially open, if, strictly speaking, it could imply a move down to 45,500. I'm not sure it'll go as low as that necessarily, but that's what the technicals suggest is possible based on that topping structure that we've got over there. And what's also interesting is that there are a number of gaps on the top 40 future down here which are still unfilled. And what the market does often do is it does tend to go and target those gaps to fill them. And those, if we break below 47,500, it's quite feasible that those gaps could come into play. And they come into play at about 46,500, and then there's another one down here at closer to 45,500.
I have to say it's very interesting to see how the market tone has changed, because this time last week we were saying, well, it's almost unlikely that that option structure that you had put into place for the portfolio might work out based on kind of the mood and the fact that, this time last week we were building that sort of upward trend there that you can see on the charts, and then things have sort of fallen in a heap, probably from about Wednesday or Thursday last week.
Yes, that's right. Yeah, I mean, there have been a couple of contributors to it. A lot of the weakness that we've seen in our market has come from the resources shares, and that has really weighed on our market. So if you look at the way we've performed against some of the overseas markets, we've been hit quite a bit harder because we've got so much resource exposure in our market. So yes, the tone right now is a little bit cautious, and I suppose it does also come after the revelation of those US jobs numbers last week, which seemed to almost put it in the bag that we're going to get a US interest rate hike in December. And now the markets are grappling not with if we're going to get a rate hike, but now what's the pace of future rate hikes likely to be like.
Yeah. Well, guys, taking all this into account and the recent trades for the portfolio, what is it looking like at the moment?
Right, so we've got 355,000 Rand in our portfolio. It is down a little bit from last week because obviously we lost money on Redefine. There's our 5,500 Rand loss reflected there. At the top here, we've got our December put spread structure, which is still working in the background for us. And then we've recently, or this week, we've opened this long position in Steinhoff where we long 2,300 CFDs at 84 Rand each.
And then to end off with, you've got one last course date.
Yeah, my final course for the year will be this Saturday, the 14th of November, and that's going to be in Johannesburg. So if anybody would like to attend that, feel free to email me, garth@traderscorner.co.za, and I'll send you all the details.
Okay, great. Garth, we'll leave it there, and we'll see you next week. Thanks as always. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner is brought to you by IG.